Hey, welcome everybody. My name is Jesse Randall. I'm the CEO and co-founder of Sweater, and we are hosting you here for Founder Saga with Clate from Keap. Our objective in doing this is really to open up a conversation with founders who have gone through, the tough process of getting online and finding success, and giving these founders an opportunity to be able to look back and reflect on the experience that they went through to help set more realistic expectations for what each of us go through as founders. But not just the expectation that it's hard, but also the joy and the feeling that comes out of making it out the other side and that you can make it. So with that, I'll give you a quick overview of what we're going to be heading into here with Clate. And part of what's going to be fun about this is a bit of a Q&A session here towards the end as you interact and hear what Clate has to say. If you've got a tough question for him, or a nice one, or a softball, or whatever you'd like, throw it in the Q&A section. And if we get a good question in there, we'll select you to come up and actually join us live so that you can ask Clate the question yourself. Otherwise, we're going to be diving in and learning more about Clate's experience building Keap. So with that, Clate, welcome.
Jesse, great to be here. Thanks so much for having me. I look forward to the conversation.
Yeah. So why don't we, we start off by kind of having you give us a baseline for where Keap is at today, and sort of some of the milestones or achievements that you've had along the way.
Yeah, you bet. We've got a couple 100,000 users on our software. We've got 400 employees. We've built the business to over 100 million in annual sales, and we are, we're just having a lot of fun doing what we do. It was obviously a big challenge in the early days, and we'll talk about that. And there's ups and downs all along the path, including a rebrand that we did last year. And we were Infusionsoft, and now we're Keap. And we've been, we learned a bunch through that process as well. There's no, there's no magic threshold you get to, and then suddenly everything's amazing as an entrepreneur. There's ups and downs, peaks and valleys, good times, bad times. That's just the way it is. But I love it. It's fantastic, and I think if you're an entrepreneur, you live for that journey, that climb, the ups and downs, everything that you go through. And it's been an amazing blessing to me to be able to lead this company. So looking forward to talking about it.
Yeah, that's fantastic overview. And I mean, so many achievements that you've been able to have, with Infusionsoft / Keap. I guess it should be Keap, formerly Infusionsoft.
There you go.
So when you first started, if I can ask, did you ever imagine that you'd end up where you're at right now with the company?
It's funny. When we first started, I had been at a software company and had built up a little revenue stream to about $100,000 a month, and it took us a year or so to do that. And I had this view that I was going to join up with my co-founders who had started the business, and I was going to help them get the business to 100,000 a month, and then we were going to sell. And I was going to pay off all my student debt, get out of debt, make a little bit of money, and then move on and do what most people do in Arizona, which is invest in real estate. So that's what I thought was going to happen. It turned out to be way harder to get the business to $100,000 a month. Turns out that's a lot harder to do as an independent company than it is to do it as a little division inside of a company, a bigger company. So it was way harder to do, and something funny happened along the way. I fell in love with the business and didn't want to sell it.
I fell in love with it. I love that. And I think that's ultimately one of the requirements, right? To find success, you got to love the business. All right, so let's jump back into time and give everybody a little bit of a preview of what you thought this was when you first came up with it. So I mean, we call it back the napkin. So looking back on that day when you spawned this idea, what was the original idea? Is it what it was today, or what it's become?
Yeah, so when I joined my co-founders in the summer of 2002, they were doing well, the candid truth is they were doing any technical work they could to get paid. So these were smart technical guys, but they would do everything from write software to clean hard drives to pull cable wiring, you name it. They were just very technically capable. And they had started the business about a year before. But by the time I joined, they were really starting to get into custom software development. And so when I joined, one of the first things, like we almost immediately said, okay, no more building computers, cleaning hard drives, pulling cable. We write software. That's what we do. We're not doing anything else but write software. And that was within like a week. We made that determination. We said, so we started to say no to things. This is a really important theme of saying no to stuff so that you can get focused on what you do really well. Well, we were so broad. We were a mile wide and an inch deep that we would say yes to any technical thing. We narrowed it down a little bit and said we do software development. So to answer your question, when I joined, I believed there was a software development company that we could build up and sell and make some money over the course of 3 to 5 years. And that's the way I was thinking about it. Within about 6 months, we went from custom software development to let's do web-based CRM develop software. And it was still semi-custom was the thinking. We would take our code base that we had and we would provide this web-based solution, and we would charge by the hour to customize that core solution for our customers. And when we started to do that, I began to see, it wasn't too long after that that I began to see that there was potentially a bigger opportunity we'd been thinking about. So about a year in, we were trying to get to our first product, and we were doing this semi-custom CRM. And that was the point when I started to go, maybe this is going to be a little different than I was thinking about this custom software development company that we kind of build up and sell. But, it was certainly a very challenging first year, and my vision was not expanded because I was just trying to, see in front of me enough to take one step. We were living day to day. It was just, just in survival mode.
Yeah. Okay. So this is interesting. I mean, there wasn't really then like an aha moment that like the light flipped on and you said, I'm going to build Infusionsoft that will one day become Keap. Like this was a process that went from broad to narrow a little bit to doing work for other people. So, I mean, at some point you decided to make this your own, right? So where was that? Was that in that first year?
Yeah, it wasn't the first year. So what happened was about 18 months in, we had, well, a little over a year in, we had one of our semi-custom clients that showed this web-based CRM software we had built for him. He showed it to a bunch of his customers, and they said, well, we want that for our mortgage. And they were all mortgage brokers. So he was a marketing coach to mortgage brokers, and they saw it, and they said, whoa, well, we want that. And so about a year and a half in, we created a mortgage industry solution of this CRM software that we were doing. And that was kind of our first foray into product. And then it wasn't long after that that we began to see there was a more general solution that we could provide, what you would think of as the predecessor to Infusionsoft or to Keap. It took us about 2 years to get to that point where we created a solution. 2 years that I had been there, and about a year before that my co-founders were dabbling in anything and everything technical. So we went from anything and everything technical to we do custom software to we have a semi-custom CRM solution to we've got this mortgage CRM solution to the product that we know as Infusionsoft. And it took about 2 years to get to that first, predecessor of Infusionsoft, that product. And it took another probably year after that to get to where we were selling that product without additional customizations or anything. It was, we got out of the custom world, and it was just a web-based, subscription-based product.
Yeah. Okay. So this is really interesting because I think that we're touching on a few elements that I think are good realizations for founders. I mean, first, that this time frame, is pretty long.
Yeah.
And we're talking about
really long
years here.
Yeah.
And so something that I talk a lot about with founders when I get the chance is the concept of survival, right? Sometimes entrepreneurship and finding success, it's as much about just surviving personally and financially within the business as much as it is building a product that the world really wants.
Yeah.
Because you've got to make it through the other side. So before you ever bring in outside funding to support you, you've got to build something or otherwise be able to bring in income that can help you to make it, right? So if
Yeah.
you're not independently wealthy, how do you survive? And I think that you're painting an interesting picture here that, it's a longer time frame.
Yep.
Build a product through this, but you also have a machine running that is still bringing in income and is also drawing you along the path that's going to get you to the product where you really need it.
Yep.
So would you say that the services, was that your primary income during that period of time?
Yeah. So we really were a service company trading hours, trading our hours of software development for dollars. And we really just, it was a process of turning from a service company into a product company. And when you don't have venture capital behind you and you don't have a bunch of savings, that's the only way you can do it. You've got to try to scrape things together. What you end up having to do is you're basically doing your service work during the day for your clients, and you're burning midnight oil trying to fashion that work into a product that you can then take to more clients without having to do customizations and one-offs and that sort of thing. But that transition from service to product, I believe, it's really tough. It's really hard. It takes a long time. It can feel grueling and painstaking and very frustrating. But I also believe it creates much better solutions for the customer than when we get a slug of money, a bunch of capital, and we go in and we try to build a product.
Hmm.
If you do it the service-based way, your customers are telling you what's really needed and they're showing you what's valuable, and you're not just in the cutting room floor trying to figure out what the product is. You hear it, you get the everyday feedback from customers. And when we were going through those first 3 years, it was just brutally difficult. And the truth is that during much of that, I wouldn't have wished it on my worst enemy. I was like, it was so hard. But in hindsight, I can see that it was exactly what we needed, and it helped us to create a great solution that we never would have got to if we had gone and raised some capital and tried to build a product. So I think it's a
Hmm.
really important lesson for entrepreneurs that A, you don't have to have venture capital to get started. And in fact, B, it might be better for the customer and the long term of the business to really build a product that your customers are willing to pay for every step of the way.
Hmm. Yeah, that's really interesting to talk about that, the difference in mentality, right? Because I think a lot.
Oh, I lost you, Jesse. I think I lost you. Yeah, I think your AirPods probably died.
Oh, there we go.
There we go.
Now it's working.
We're good.
That's super weird.
Yeah.
I'll just put in both of them. Um, so as I've seen it the last 5 years, it's often viewed as the first step is to go and get money, right?
Yeah.
Or take the minimum number of steps necessary in order to qualify for outside financing.
Yes.
And it sounds like, the argument that you're making is that that's not necessarily the best path, right? Because as soon as you take outside capital, the clock is ticking, right?
Right.
And there's a different kind of pressure on the business to perform.
Yep. Yeah. I'm a fan of taking capital, but I think that but my view on it's a little different than what you just described. I think you said it really well. A lot of times the venture capital world is, you know, do the minimum amount you need to do in order to prove your concept and get capital. I think of it differently. I think of delivering, show the value that a customer is willing to pay for, and then an investor will follow. And that's just a lot easier to get investors
Mhm.
bought into what you're doing, especially if you're a first time, you're raising capital for the first time and you're kind of an unproven entrepreneur to the investment community, especially if you're not in Silicon Valley. If you don't have the connections, then really the way to raise capital is to get sales. And why? Because sales prove you're creating value and investors want to see value. So I have a different view than you describe some people have. I want to get the customer to see value and pay for it. And by the way, when the customer sees value and pays for it, you don't have to raise as much capital because the customer is helping to finance the business.
That's right. So if we continue going down that path, it took 2 or 3 years to evolve to the point where you had a product that was going to be your own instead of someone else's. How long after that until you raised outside capital, more or less?
Yeah, so the first 3 years were a total grind. I've explained the business model and service to product, but meanwhile, there's an entrepreneur and family that's going crazy. So it's really tough to get through that.
Yeah.
You know about that. Every entrepreneur knows what I'm talking about. But once we got through that first 3 years of great difficulty, where we had a product, it was subscription based, we were starting to sell it, it was picking up momentum, we were actually able to pay ourselves, and um, it started to get really fun. And we had this business that was starting to, it was growing, and word was spreading, and people were using our software and getting great results with it. And we were having a blast. And by the way, we were using our software and having great results with it. And so we we went through this period from like a beginning of year 4, call it, until about year 6, where things were going really well and we were living the dream. It was like, it was all of the hard work and effort that we had put in was paying off. And all of our friends and family who had been so worried about us and had been telling us for years to get a real job were now telling us how proud they were of us and patting us on the back and bragging about us and telling us they knew all along we could do it. So, yeah, right. Didn't you
Right.
just tell me 6 months ago I should be getting a real job? So, you know, you have your, I certainly had my parents and others close to me that were just always in our corner and were amazing. But, entrepreneurs are doing something that's so different than most people can understand. And people with great intentions are worried about you, and so you go through that period as an entrepreneur, then suddenly things are getting really good. And it's like it's the chapter 1 of your 20-year overnight success story. Chapter 1's like those first 3 years. It starts to get successful, and that's where we were having success. And so into year 4, 5, 6, we were just having a ton of fun. We were able to pay ourselves nicely. The business was growing 100% year over year. We were a subscription based business. By the way, half of our we charged this is another little um, indicator of how we thought about capital and how we thought about growing. We charged our customers a setup fee to get started with us, to put the software, implement the software for them. Well, that setup fee was about half of our total revenue. So we were a subscription business, but we had a really nice chunk of service revenue as well. And it was an indication of this metamorphosis from a service business to a product subscription-based business. So while we were going through that period of time, the money was good. We had 30, 40, 50 employees. Business was growing fast, and we were having a really great time serving our customers. But we started to see that there was a much bigger opportunity, and that's where we realized, oh, we had in about year 3, when I started to see this was going to work, I raised a little bit of friends and family money. And by year 5 or so, I started to realize, this is probably a good news, bad news thing for those friends and family investors. The good news is we're going to be able to give them a much bigger return. The bad news is we're going to go for a higher peak on the mountain. It's going to take us longer to get there. So I had to go back to all those friends and family investors and tell them that good news, bad news story. And they all said, great, let's do it. Let's go for it. So, and we didn't raise a lot. We raised maybe $500,000 or so, in that friends and family round. And by the way, I didn't take any money from anybody until I was confident that we were going to grow it. I couldn't bring myself to. My parents were my first investors. I couldn't bring myself to have my parents, my dad's a teacher. I wasn't going to take a chunk of their money unless I felt confident that we could multiply it.
Yeah. Oh, and raising money from friends and family is so sensitive,
Yeah.
it's for that very reason, right?
Yes.
You're going to be around them for a long time, right?
Right. So the short answer is it took us about 6 years into the business, and that's when we decided we can see something much bigger. We could see that there was an opportunity to be the Salesforce.com for small businesses, so to speak. And that in order to do that, we needed to raise serious capital. And so at the end of 2007, we did that. And we raised a $9 million Series A round. And that's when, the game changes when you do that. And we were on we wanted to continue the fast growth, and that got us into a different phase of the business.
So let's go back and examine the process on the product specifically.
Yeah.
So obviously you guys had the capability internally to build your own product, and outside customers were funding it. But let's talk about the mentality of how you built it and how you got to an answer of something that was really the right answer. So tell me about like the internal discussions that you had in the discovery process of saying, this is what we need to build next. And maybe that transition between, building it for other people and saying, we need to build this for ourselves. What was the discussion happening internally, and how did you figure out the right answer?
Yeah, real quickly, just a clarifying question. When you say we need to build it for ourselves, do you mean for our use case, or for a broader set of customers independent of that client?
The latter.
The latter. Okay. So it was a really interesting process. Initially, we were built to create a solution for the client that was paying us for the project. And that's what we did. And what happened was we started to see where there was real value for our customers. And we could see the areas of what we created that customers just oohed and awed over. And then we could see the things where they're like, okay. And so what we found was the oohing and awing was around helping them to get organized with all of their data, helping them to follow up more effectively with their prospects and clients, doing as much as we could with automation so that things would happen automatically for our clients. And so we started to recognize we went from custom software to semi-custom CRM, because we could see that in every project we were doing, there was a need to have a customer database that was organizing all of our clients' customer information. And then we could see that when we enabled them to effectively do email marketing to those customers, automate some tasks related to those customers, it was highly valuable. And so those experiences we were having with, we'd bring on about 2 new semi-custom clients every month that were paying us $5,000 to $15,000 for a project. And we started to recognize that there were a bunch of commonalities, and that's why we created semi-custom CRM. And then the learnings we were having as we saw the value we were creating led us with more and more confidence into the direction of this CRM sales and marketing automation solution. And so I think it was just Jesse, that's why it takes a long time, because you're learning what's really valuable, and you're building confidence in that, and then you're figuring out how to package that together. And all the while you're going, okay, well, this client was like that client, was similar to that other client, and you start to see a picture of the target market that comes together. And that's just, it's all the work, it's all the stuff we learn in business school, but in practice, it's a very slow, gradual process. You don't just go get that right, which is part of the reason why there's so many times venture capital doesn't work out, because you get an idea, but to go validate it and get it nailed and actually arrive on product market fit, it almost feels magic when you get it, because it's so elusive.
Yeah, elusive is definitely right. So when you're looking at this period of time there, I mean, you were 3 years in. I mean, I'd say by that point, when compared to the day one when you joined as a co-founder, would you have called yourself, maybe for lack of a better term, an expert by the time you were 3 years in, an expert on that customer's problems? Or did that come over time after that?
That's a great question. I have never been asked that question. I've talked about our startup many times. I don't think I would have considered myself an expert 3 years in. Um, it took us probably another 3 or 4 years before I considered us to be experts. And if you really boil down what we do, we help them get organized and then we help them follow up and automate that as much as possible. Organization, follow up, automation. Simply put, automated follow up. And we
Mhm.
became automated follow up experts probably 5 years in, something like that. It wasn't 3 years. It took longer than that. And I'd say 5 or 6 years. We started to write about it. We started to teach it. We started
Mm,
our marketing became much more educational. We had a product
yeah,
that people were like, "Oh yeah, I get it." And so that expertise was a good 5, 6 years in the making.
that's interesting.
That might
So
be
do you think that
discouraging for
it's
the people listening, but it's the truth.
yeah, well, I think that this is important though. So in examining that, I mean, let's just say the standard for most companies is 5 years to become, I kind of hate the term, but a thought leader in the market, right?
Yeah.
You know more about this than anybody else. So let's say it takes 5 years to get there. So when you don't have that, but you have a vision to become it, right? What mentality do you need to have so that you don't get ahead of yourself? So you're not too big for your britches, so to speak, right? To build a product that people really want, but knowing that you're not an expert yet. Like,
Hmm.
how do you bridge the gap between that period of time?
Hmm. Boy, that's sure a good question. I think that's why it took us so long because, we're pretty authentic. We weren't, there's the old fake it till you make it saying, and
Right.
we weren't real comfortable with pretending we were experts if we weren't experts. Um, I think what we were expert at was taking the customer's software needs and turning that into a solution that really opened their eyes at a reasonable price. They sometimes small businesses didn't think 10 grand was reasonable, but I knew from my experience, no, this should probably cost $100,000 for a bigger business, maybe even
Mhm.
more. And so I think we were expert at taking their needs and turning it into a solution. I don't think we were experts at follow up, and it took a while to put the
Mm.
automation, the automation with the messaging and the follow up. But I think the answer for us was just we were authentic and we found where we were legitimately driving value, and over
Mhm.
time that repetition, the old 10,000 hours thing, it turns into
Yeah,
expertise.
yeah, that's really good. Um, so with your ability to build the product internally, um, uh, not every company starts with the ability to build their own product.
Hmm.
Would you say that it's possible to go through the process you went through to find your product market fit if you don't have the ability to build it internally?
I do think it's
Or would,
possible. We did it by having three co-founders who all had different areas of expertise. We had a great software developer, just a coder. We had a great coder. We had a great solution architect, for lack of a better term, and we had in me someone who couldn't do anything technical but was willing to do everything else. I have an MBA and just kind of generally sales and marketing oriented, and um, so that's how we did it. But what I see founders and co-founders doing all the time is there are a lot of different individuals and groups out there where you can partner up with them to create a prototype and to build an MVP and get it out to customers, and determine whether or not the customer is willing to buy that if there's real value there. So I think you can do that in a from a technical sense in building a product. I'm sure there are corollaries in a non-technical product, but you know, software is the world I know, and so I get frequently asked by people, "Well, I've got this idea. I don't have a co-founder that's a software developer. How do I get this thing built?" And there's just a lot of ways to do that today that didn't exist probably 20 years ago. And so I think you can do it. I do think it's possible. It's harder
Mhm.
probably, but I think it's possible.
Yeah, that's good. Okay, so before we bring in an open question, I want to ask if you dive in for a second on what it's like to manage your family situation when you're going through these early volatile unknown stages. Um, I mean, most of us have some kind of family situation. I mean, we may or may not have kids, but we may have a significant other, whomever else that's part of our life.
Yeah.
So, with the volatility, what did you find was most helpful for you in helping to manage, your spouse's expectations and the direction that you were trying to build towards?
Um, it's a lot of ingredients to make it work, but in my estimation, you've got to have you got to have faith. You got to have a belief that you can do it. You can't. There are so many crappy things that happen every day to the entrepreneur that's trying to create something new, that if you get into a mind space where you are doubting and you're fearful and you're uncertain, it's it's almost certain you're not going to make it. And I mean, it's such a cheesy saying, but the mind can achieve whatever it believes. It's true. It's just absolutely true. And it's never more true than it is for an entrepreneur that's trying to get something going. And so if you lose the battle between your ears, you're toast. And so I think there's a mindset that's required. Now, for me, that was just grounded in faith. I was very blessed to have a dad whose favorite or most repeated saying to me was, "You can do it." I just heard, "You can do it, you can do it, you can do it," literally hundreds of thousands of times growing up, whether I was playing a sport or trying to pass a class that was, trying to do well in a class that was hard, or a relationship I was working through, whatever. My dad was always, "You can do it, you can do it, you can do it." So I think entrepreneurs have got to have that grounding belief, and because the whole world is going to say you can't do it, and all of the data that you're looking at is saying you can't do this, and even your customers are saying you suck at this. so, so how do you get through that? You got to have a belief that's just an iron will. And for me, that was grounded in my faith. It was grounded in my family. It was grounded in a mindset that my dad helped to solidify. And I just it's the reason we call the company Keap, because entrepreneurs have to have that tenacity, that grit to keep going. So our mantras: keep going, keep serving, keep growing. For entrepreneurs who we serve, that mindset it's necessary. You've got to have that. So I think that's the biggest challenge for entrepreneurs. It certainly was for me and my co-founders. We work with small businesses. I see this every day. I have people that ask me for advice all the time. And it's so funny because I give the advice and they can't hear it. It's not logical. It doesn't make sense. It might feel touchy-feely or, warm fuzzy or whatever you want to say, but it is absolutely the truth. If your mind starts to go to a place where, "I don't think this is going to work," you're right, it's not going to work. And so that's where the real challenge is for entrepreneurs. Well, where do we adjust versus throw in the towel? And my advice is, hey, adjust all you need to, but don't quit. Don't give up. It's not.
Mhm.
It's there to be found. It's there to be figured out. And I revere tenacious entrepreneurs who keep going. It's truly what, like, it's the spirit of our company. It's the brand of this company, and we are all about empowering entrepreneurs to be successful, because we know how hard it is. We've been there ourselves. We've been there with friends and family and customers. Now literally we've seen it hundreds of thousands of times, and it's a mindset game.
Mhm. That's awesome. I mean, we talked about financial survival a little bit earlier. I mean, there's also the between your ears survival, right?
Yeah.
I liked how you said that. Is if you can't make it work up here, then you're not going to make it very far.
Yeah, I'll share
Um,
with you one thing that was really significant for me. Now, I have a very um, yeah, I have a very logical mind. I also have a very strong feeling heart, but most of the time, my logical mind leads in business. And there was a period of time where I, we were probably 18 months into the business, and I was just like, if I could have gotten out of the business, I would have. But the only reason I didn't at that point is because I had personal guarantees on office space and equipment and a bunch of other things, and it would have been worse to step out of the business and try to figure out how to service those those debts. So we stuck with it. But about 2 years in, I remember very distinctly, we had been living as month to month as you can possibly live, maxed out credit cards, completely strapped financially, taking home about $2,000 a month in 2004 with 4 kids, $100,000 of student loans. I mean, there was no math that would make work what we were what we were trying to do. And meanwhile, my amazing wife's looking at me saying, "What are we doing? Why did we go to 8 years of college? And this is what we're doing. Like, what is going on? Do you?" And I was like, "It's getting better, hon. It's getting better." She's like, "It's not getting better for me." And one night she said, "Look, I I just can't keep doing this. You've got to promise me you're going to go get a job. Promise me that when you go to work, promise me you will look for a job." And I had started giving lip service to, "I'll kind of keep my eyes open." I persuaded her to stick with it. But this night I wasn't winning the argument, and she was insistent, and I knew it. This was a hard conversation. There were tears both ways in this conversation because I could feel we were getting close, and we were about 2 years in, and she said, we were probably at 2.5 at this point. And she said, "Okay, promise me you'll look." So I went to work the next day planning on looking, and I got swallowed up by the business that day, just like we always do every day. And I'm driving home and I'm realizing I've not done what I told my wife I was going to do. I did not look for a job. And I felt awful. I'm like, crap, what am I going to say? I didn't do what I said I was going to do. And I can't believe that I got so caught up all day. So I walked into the house that day, and I'll never, ever, ever forget. I walked in, Sharice turned around. She said, "Did you look for a job today?" And I said, "No." And she walked up to me and she gave me a huge hug. She just held on to me and was just holding on super tight. And then I could feel her shaking and I could tell she was crying. And then I started crying. I'm like, "Shoot, what's going on?" And we're both crying. And I was like, after a little while, we kind of pulled away and I said, what's going on?" And she said, "Everything's going to be okay. Just keep going." And I held her again and I was like, didn't know what was going on. And she just said, "God knows what we're doing. It's going to be okay. Just keep going." And that keep going moment is, you've got to have that as an entrepreneur. And by the way, every successful entrepreneur, they have their keep going moment, or two or three or four. But every struggling entrepreneur needs to know that that's what it takes. It takes that kind of tenacity and grit to push through the challenges. And you have to be willing to adjust, but not ever willing to abandon it, because there's a way to get through it, and you just have to be willing to make some adjustments, but you've got to figure out how to get through. And once I had my wife with me on it, then all of us, then I always tell people it's like my Rocky Adrian moment. I was like, I could do anything at that moment. And so that was really critical. And that's kind of the deeply emotional one. But I'll tell you, the logical one was that, and you kind of alluded to this, there was one day where every day was a fight for survival. This was probably 18 months to 2 years in. And I did want to get out of the business at that point. I was just like, ugh. And then I had this realization. I was like, you know what? Every day we survive, we get closer to success. It's literally a daily, if we can just make it we make it another day and we get a little closer. And it sounds so trite to say it, but it was so real to me at the time when I was just discouraged and overwhelmed and felt like, crap, we are never going to get through this. I tell people sometimes, in a month you would have 29 really bad, crappy days and one little glimmering possible day. It's like, and then it was just the same thing. But I realized that glimmering day, actually, we made it another month. We paid our mortgage. We're surviving. We're making it, and we're getting closer. So I share those two stories of the heart and the mind, because when you can be grounded and recognize, no, there is a way through this, then you've got a chance to be successful as an entrepreneur. But when you get tossed around and you're losing the battle inside your mind, and your heart's not in it, your support group around you's not in it, that's when that's when it's too tough.
I wish I had a mic I could hand you so you could drop it. That was that was that was an awesome story, and I think that's, I mean, that's the core of being an entrepreneur, right? Is um, managing those relationships, and going through that. And when you have a family, you are doing it together. It's not just you grinding it out every day and having a hard time, right?
Yep.
Because there's just as much uncertainty for everyone that's at home doing whatever else they might be doing. So thank you for
Yep.
sharing that. I think that's an inspiring story. Um,
Yeah.
I have
Right on cue.
someone pounding at the door. Speaking
Right.
of which, um, so I'm going to apologize to those that asked questions. We do have another interview after this, and I want to just give you the last 5 minutes, Clate, to just offer any words of wisdom. Like if you're looking at this audience and talking to these people who are in the trenches, what would you want them to know if they are just starting out?
Yeah, I'll do that. I do see the questions. I'll hit it real quick. Biggest change in venture capital space from 2007, our Series A, until our Series D, which we did 2016, and then we did a debt round more recently. For us, the biggest difference is the small business SaaS space has evolved dramatically. Whereas in 2007, nobody wanted to touch small business SaaS with a 10-foot pole. Today, there are proven metrics that if you can demonstrate that, you got a good opportunity to raise capital. I think more broadly, what I see difference in SaaS is back then, if you weren't in one of the hot spots of Silicon Valley or Boston or maybe even Austin, Texas back then, it was very difficult to raise venture capital. Today, you can be anywhere. The capital travels, and it's a much better market. The other question was, when does one know it's time to pivot? How do we measure a possible direction we're looking at? That's a really tricky one, and there's a lot of gut to that. What I would say is pivot, don't quit. Jim Collins said to me one time, know the difference between the need for a vacation and the need for a change. It's similar in business. There's a big difference between pivoting and quitting. Learn and adjust, and how you measure that possible direction. It really depends on what you're looking at, but you've got to try to put some kind of analysis to a very imperfect data set and try to get a sense for what that confidence would be. And then most importantly, you got to move in that direction with confidence. If you're moving, kind of flirting with it, I can tell you already, if you're going to flirt with it, don't do it. You got to be moving in that direction with full confidence, and you got a good shot at it. All right. So what I would just say, thanks, Jesse, first of all, for having me. It's been great to be with you. Hopefully this has been useful for the listeners. What I would say is entrepreneurship is a grind, but it's also amazing. The way that it enables the creator to make an impact on the world, to make a difference for themselves, their families, their communities, their customers and partners that they serve. It's so fulfilling. And I believe we're born to create. I believe that everybody's born that way, and school and institution mostly stamps it out of us. But there are a few brave souls who want to continue to create despite all of that, and their canvas is, these entrepreneurs, their canvas is the business world, and they create something that's really cool. And so we just, we love the entrepreneurial spirit. That's what the company's all about. And what we do is we try to empower entrepreneurs. So, I guess the commercial is, we're all about sales and marketing automation for entrepreneurs to empower them. We empower them through the software, obviously, first and foremost, but also through training and through a community of entrepreneurs helping entrepreneurs to be successful. So that's what we do. We love doing it. It's been a blast over the past 18, 19 years to build the company up. It's been, I'll finish with this. The first 3 years were brutally difficult, but they were, in hindsight, I realized they were exactly what we needed to build a $10 million business. Then we ran into a period of time as we made a business model transition that almost put us out of business. It was super challenging. It was a couple of years of just really, really tough work, but it's exactly what we needed in hindsight to build a $100 million business. And then we got to that plateau, and we went through a really tough product transition where Infusionsoft was the market leader in marketing automation for marketing savvy small businesses, but we wanted to create a lighter, easier version. And that product transition was incredibly difficult. But now we're on the other side of that. And I can look back at that and say, that's exactly what we needed to build a billion-dollar company. So today we're very clear on who we are. We're sales and marketing automation for serious entrepreneurs with 1 to 25 employees. That's when they start with us. They can grow with us up to about 100 employees. But from there, they should go and move up to HubSpot or Salesforce or something like that. They'll pay a, 5, 10, 20 times more, but that's the reality when you get bigger. Most of our customers don't ever get to that point that they would need something like that. And we love serving them with our Keap product. And we have a light version, we've got our pro version, and we have what we call Infusionsoft by Keap, which is our most powerful solution. But it's all about empowering entrepreneurs. We love doing it. We combine CRM, marketing automation, sales automation, and payments into one platform to help entrepreneurial small businesses grow. And we especially focus on consultants, coaches, and early adopters of sales and marketing automation. So that's what we do. You can learn more at keap.com. We got a bunch of resources on there for entrepreneurs. And we obviously have the services and coaching that we package with our software to make sure people are successful.
Clate, thank you so much for your time today. I love being able to hear the full story of what it took to get Keap to where it is today. And I mean, what a history, 18 full years of operating this company, and excited to see what you have on your runway next, fully at the helm again, as you told me earlier. So I'm excited to continue to watch the journey. And thank you to everyone that joined. We'll also have this recording available as well. So thanks again, everybody, and have yourselves a wonderful Wednesday.
Thanks, Jesse. Great to be here with you. Thanks, everybody.